Welcome back, my friends. The news today is that oversupply fears are pushing oil prices lower. Fear of an oversupply of oil on the back of reports that Saudi Arabia is considering returning to its strategy of pursuing market share rather than supporting prices has sent both WTI and Brent falling this week. This week, U.S. crude oil prices fell by nearly 3% and closed below $68 based on reports that Saudi Arabia committed to a production increase. Saudi is ready to increase production in December even if the move results in low oil prices for a prolonged period, people told the Financial Times. But, before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And, please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. U.S. crude oil prices fell nearly 3% on Thursday on a report that Saudi Arabia is committed to pressing ahead with production increases later this year. Saudi is prepared to ditch its unofficial oil price target of $100 per barrel, people familiar with the kingdom's thinking told the Financial Times. Saudi officials are ready to increase oil production in December even if the move results in a prolonged period of low oil prices, the people said. Prices are also under pressure on the expectation that oil production will rise in Libya. Factions in the North African country reached a deal Wednesday to appoint a new central bank governor. A political dispute over who should lead the bank has led to production disruptions. The prospect of rising production is set against a backdrop of soft demand in China, the world's largest crude importer and second largest consumer. Oil prices rallied earlier in the week after Beijing announced a new stimulus package. The report, which cited people familiar with Saudi Arabia's thinking, said the country is ready to abandon its unofficial price target of $100 a barrel for crude in order to regain market share. I am not surprised by the reaction in the market because the OPEC put has been protecting downside since they have kept barrels off the market, Rebecca Babin, CIBC Private Wealth senior energy trader, told Yahoo Finance on Thursday. While the Organization of the Petroleum Exporting Countries, which is comprised of 12 of the world's major oil exporting nations including Saudi Arabia, has been cutting output since 2022, the US and other oil-producing nations have been increasing theirs. Last year, the US produced record amounts of oil and gas. However, Babin questions whether OPEC is ready to do a full pivot to regain market share, since despite the group's pledges, some member countries have produced above their quotas this year. I think this decision is more about recalibrating who is carrying the burden of OPEC production cuts, said Babin. My sense is the OPEC wants the countries that have been overproducing to compensate for overproduction while allowing those who have complied ability to bring barrels back, she added. Earlier this month, OPEC+, which includes OPEC members and non-members like Russia, Kazakhstan, and Sudan, delayed the unwinding of some of its voluntary cuts scheduled for October as oil prices fell. Wall Street analysts had already been lowering their price target for Brent based on the expectation of growing supply and weak demand. In September, Morgan Stanley cut its Brent, BZ=F, forecast for the second time in a month, citing recent price declines that signal the risk of considerable demand weakness. The analysts predict Brent will average $75 per barrel in the fourth quarter of this year, $5 lower than the prior downwardly revised forecast of $80 issued in late August. J.P. Morgan recently cut its fourth quarter forecast from $85 to $80 per barrel, citing oil's large underperformance in August. Earlier in September, oil dropped to its lowest level since 2021, but it rallied last week off those lows. Year to date, WTI is down 3%, while Brent is down roughly 4%. Saudi Arabia is preparing to increase oil production for several reasons. Market share: Saudi Arabia aims to reclaim its shrinking global market share. The country has been losing market share due to production cuts and increased output from non-OPEC countries like the US, Canada, and Brazil. Oil prices: the decision to increase production comes as oil prices have been falling. By increasing output, Saudi Arabia hopes to stabilize prices and maintain its influence in the global oil market. Economic needs: Saudi Arabia needs higher oil revenues to finance its ambitious Vision 2030 reform project. Lower oil prices have already led to cuts in funding for various giga projects and other plans. Global demand: there is a growing demand for energy as economies recover from the pandemic. Increasing production can help meet this demand and ensure a stable supply of oil. These factors combined have led Saudi Arabia to consider boosting its oil production in the near future. Saudi Arabia's decision to increase oil production can have several impacts on other oil-producing countries. Increased production from Saudi Arabia can lead to heightened competition in the global oil market. Countries like Russia, the US, and other OPEC members might need to adjust their production strategies to maintain their market share. Higher production levels can lead to a decrease in global oil prices. This can benefit oil importing countries but may hurt the revenues of other oil exporting nations, especially those with higher production costs. Countries that rely heavily on oil revenues, such as Venezuela and Nigeria, might face economic challenges if prices drop significantly. This could lead to budget deficits and economic instability. Other OPEC members might need to negotiate production cuts or increases to balance the market. This could lead to tensions within the organization as countries try to protect their own interests. Lower oil prices might discourage investment in new oil projects, particularly in regions with higher extraction costs like deepwater drilling or oil sands. This could impact future supply and long-term energy strategies. Overall, Saudi Arabia's decision to increase oil production can create a ripple effect across the global oil market, influencing prices, competition, and economic stability in various oil-producing countries. Saudi Arabia's decision to increase oil production can have significant geopolitical implications. Saudi Arabia's move could shift the dynamics within OPEC. As the largest producer in the group, its decisions often set the tone for other members. Increased production might lead to disagreements or renegotiations of production quotas among OPEC members. The US, a major oil producer and consumer, might view this move with mixed feelings. While lower oil prices can benefit American consumers, they can also hurt US shale producers who have higher production costs. This could lead to diplomatic discussions or tensions between the two countries. Russia, a key player in the global oil market and an OPEC Plus member, might need to adjust its production strategy. Increased Saudi production could lead to lower prices, affecting Russia's oil revenues and its economy, which is heavily dependent on energy exports. Saudi Arabia's economic stability is crucial for the broader Middle East region. Increased oil revenues can help fund domestic projects and maintain social stability, which in turn can influence regional geopolitics. Countries pushing for a transition to renewable energy might see this move as a challenge. Lower oil prices can slow down investments in renewable energy projects, affecting global efforts to combat climate change. Countries that are heavily dependent on oil imports, such as China and India, might strengthen their economic ties with Saudi Arabia. This could shift global alliances and trade relationships. These geopolitical implications highlight the interconnected nature of global energy markets and the far-reaching effects of Saudi Arabia's production decisions. Increased U.S. oil production has significantly influenced Saudi Arabia's decision to boost its own oil output. Here are some key factors. The U.S. has become the world's largest oil producer, reaching record levels of production. This has intensified competition in the global oil market, prompting Saudi Arabia to increase its production to maintain its market share. The surge in U.S. oil production has contributed to lower global oil prices. To counteract this and stabilize prices, Saudi Arabia is increasing its output, hoping to balance supply and demand more effectively. With the U.S. producing more oil, Saudi Arabia needs to adjust its strategies to remain a dominant player. This includes increasing production to influence global oil prices and maintain its economic stability. The rise in U.S. oil production has also affected the dynamics within OPEC. Saudi Arabia, as a leading OPEC member, is taking steps to ensure that the organization remains relevant and can effectively manage global oil supplies. These factors highlight the interconnected nature of global oil markets and the strategic moves countries must make to adapt to changing production landscapes. OPEC, Organization of the Petroleum Exporting Countries, often faces criticism and skepticism, but labeling them as cheaters oversimplifies a complex situation. Here are some key points to consider. OPEC sets production quotas for its member countries to manage oil supply and stabilize prices. However, adherence to these quotas can vary, leading to accusations of cheating when countries produce more than their allocated amounts. Member countries have different economic needs and pressures. For some, exceeding quotas might be necessary to meet budgetary requirements or address economic challenges. The global oil market is influenced by many factors, including geopolitical events, technological advancements, and demand fluctuations. OPEC's decisions are often responses to these dynamic conditions. OPEC is a coalition of countries with diverse interests. Internal disagreements can lead to inconsistent adherence to agreements, which might be perceived as cheating. OPEC has mechanisms to monitor production levels, but transparency can be an issue. Discrepancies between reported and actual production levels can fuel suspicions. While there are instances where member countries might not fully comply with agreements, it's important to understand the broader context and challenges OPEC faces in managing global oil supply. But, what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And, before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions, doctors, including any type of specialty nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school. As well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So, be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.